Consumer confidence is key, and what we're seeing here in real time is the ability for humans to adapt, and that is the reason why consumer confidence is resurging. This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to another very special shelter-in-place edition. It's not gonna be special after a while now, folks, with shelter-in-place being extended a full another month. But another shelter-in-place episode of the Silicon Valley Snapshot. Before we begin, if you have any questions about your particular situation, whether you're thinking about buying a home, refinancing, or selling your residence here in the Silicon Valley, go ahead and text analysis to the number down below for a unique perspective on your unique situation. Let's get started, everyone. Let's dive right into the numbers, and then we'll talk about things that are happening in the marketplace right now that seem to corroborate the numbers and the data that we're seeing in real time. So if you've been watching these videos and you saw my video last week, you'll know that we now have this new data point that was not available to us, frankly, up until this point. And that's current versus last year's month-to-date statistics. So basically measuring for sale, pendings, and sold data over the course of the month to this day versus the same time last year, versus the same aggregate between April 1st and April 28th of 2019. So when you see these charts here, you'll see that the data is continuing to skew more and more in sellers' favor as the weeks go on. Last week, we saw a fairly neutral drop year over year, month to date, year over year, in the single family sector and in the overall in the residential sector, as well as in the single family sector, with a little bit of a discrepancy between condos and townhomes in the pending versus for sale or inventory levels. I know that's complicated, so let's just look at the charts right here. You'll see there is a 64% drop year over year in for sale inventory in Santa Clara County versus a 58% drop in pending sales year over year, month to date. So what does this mean? Well, last week, if you remember, it was about 62% drop off in both for sale and pendings. This week, we noticed there is less homes for sale month to date, so that number has dropped even more, but the pending sales have risen to 58%. Not a huge difference, but a 4% increase rather month to date, year over year, is fairly significant, because when you measure the delta there, now we're seeing basically a 6-point delta between pendings and for sale inventory. So the story, the narrative here has been for the first couple weeks is that inventory's gone down significantly, but so have pending listings. And what we've wanted to measure over time is how those two stack up against each other. For the first couple of weeks, pending sales dropped dramatically off. So did inventory, but it dropped even more significantly than inventory. So there was less demand than inventory relative to what we were seeing at this point last year, right? And so when you look at the relativity perspective, right, and you're looking at the demand versus the supply, it seems to indicate that there is increasing demand versus the supply that's currently available. And so when we play that out, or if that trend continues to play out, we may see a market that skews more in the seller's favor. Now, if you've been watching these videos, the question on everyone's mind is, Danny, how is this impacting the Silicon Valley real estate market? How is coronavirus, how is shelter in place, how is the economic fallout of all this impacting the Silicon Valley real estate market? And the reality is that there's been very little impact so far. I mean, don't get me wrong, there's been an impact for sure, but in terms of prices, not too much. I mean, look at the graphs down here below. You'll see that this graph measures sales price to list price ratio, as well as sales price to original list price ratio. And big shout outs to my good friend, mentor Robert Cruz, who, basically tipped me off on this particular chart here. It's very fascinating to see that in March of this year, so the last real full month of data that we have available to us, 104% sales price to list price ratio and 104% sales price to original list price. So why does this matter? Well, first of all, homes are selling over list price, and that was in March. So let's see what that data looks like in April, for April, right? I don't know what it's going to look like, but my pulse, my sense on the market is that right now we are seeing quite a bit of activity given the circumstances, and that's playing out in real time, because what you have to understand is that relative to last year, there are more pending sales than active inventory, and so relative, right? So what that means is that the market conditions are slightly more in sellers' favor right now than they are for buyers, right? Because there's less inventory and a little bit more demand. There's a little bit less supply and a little bit more demand, right? And that is actually that was not the case last week. And so if these trends continue to grow, then we can expect the environment to become more competitive. Does that make sense? I hope it does. If it doesn't, go ahead and leave a comment down below and let me know what your questions are. But coming back to this data chart here for the sales price to original list price. Original list price is what the home was originally listed for. And so what we have to understand is that sales price to list price ratio is the ratio at which the home sold compared to the price it was listed for when it sold, okay? Or when it went into contract. What you guys have to understand is that list prices are variable, because a home could be put on the market and 30 days later, the seller reduces their price. That's the original list price. Whatever they originally listed their home for, that's original. Whatever the home went into contract for, whatever list price the home went into contract for, that's the list price. Make sense? So when that delta, when you see that chart here where sales price, so in basically all of 2019, when you look at the Santa Clara County data, as well as the San Mateo County data, you'll see that the sales price to list price ratio, there was a delta there, right? Well, those 2 points intersected, at least in Santa Clara County, here in March of 2020. The market was going incredibly strong, right? So let's see how that data plays out. But for it to be even a neutral market, there needs to be 3 to 4 point discrepancy, meaning that sellers are consistently reducing their price in the marketplace, right? It's not even skewing in buyer's favor. It's not even considered a true, really falling market, declining market, depreciating market, until we see, that delta go in the, higher, like 5, 6, 7, 8% range or more. That's when you really start to see that play out. Like a few points here or there, it's really a moot point, right? Some sellers get rambunctious. They decide to overprice their home. And this is aggregate data, right? This is an average of all of the units here in Santa Clara County, as well as San Mateo County, depending on which chart you're looking at. So this is something that we're going to continue to pay attention to, because whenever you are looking in a specific marketplace, and remember guys, we can look at this data in real time for any area that you're looking in, specific to the type of unit that you're looking at as well. So again, everyone's situation is unique. Everyone's looking at different areas. So if you're interested in getting any type of data like that delivered to you that's more specific to your situation, text data to the number down below, and I'll go ahead and we'll get that sent over to you. So coming back to the month-to-date charts, we have the single-family sector versus condo and townhome sector. You'll see that the drop-off, 64% in the condo in the single-family sector in terms of for sale inventory. So practically the same really the same as the overall residential sector in Santa Clara County, and a drop-off of 55% in pending. So we have nearly a 10% discrepancy or delta there, which means that in the single family sector right now, relative to last year, the market is more competitive for buyers. Let that sink in. Now, last April, it was a rather odd spring season for most sellers here in Silicon Valley. It was not the same normal spring environment. It was a little bit more skewed towards buyer favor, not a buyer's market. Still a very strong seller's market, but compared to what we had experienced in 2018 and 2017 and 2016 and 2015, where we had this massive rush of buyers right into the marketplace, seemingly, right, and fairly low inventory levels. So last year we had a little bit of a different environment here in Silicon Valley. So it's important to keep in mind, yeah, it's a little bit more skewed. It's a little bit more of a seller's market right now, at least in the single family sector here in Santa Clara County, but that's relative to last year. Right? So still, that should be, if you're a home seller in Silicon Valley, very encouraging news. Now, the devil you know is better than the devil you don't. How does this all play out in 6 to 12 months? What is the long-term impact of the economic fallout? Well, if you've watched my videos for any period of time, you'll know I've given cases for many different scenarios, right? I've laid out the cases for many different scenarios. So I encourage you to go back and look at some of those videos to get a better idea of what the forecast looks like into the future. We're not going to focus on that today, but all I'm saying is that if you're a home seller in today's market and you're seeing this data, and your plan was to move in the next 12 to 24 months, who knows what the market looks like in 12 months from now. But what I can tell you is that right now, market's pretty good, okay? Take advantage of that because we don't know how much longer that's going to, we don't know how much longer that's going to last, right? In San Mateo County, well, if we finish up in the condo townhome sector, we'll see in Santa Clara County a dead even 65% drop off in for sale and pending inventory, meaning for condo and townhome owners here in Santa Clara County, it's a fairly similar environment to what we were experiencing last year. Got it? Okay, cool. Now let's look at San Mateo. San Mateo is a little bit different, but is just a little bit different. Last week we saw that San Mateo was skewing a little bit more in buyer's favor. This week it's neutralized to where we're at 50% drop off year over year in inventory levels, but basically 49% drop off in pending sales. In the single family sector, we had a 57% drop off in inventory and a 60% drop off in that's condo and townhomes. In condo and townhome sector, we had a 57% drop off in inventory levels and a 61% practically drop off in pending inventory levels. Now, when you look at the single family sector, you see 52% drop off in inventory levels and a 51% drop off in pending sales. So basically, the environment in San Mateo County is a little bit neutral, a little bit more neutral, or a little bit it would be more similar to last year actually than we're experiencing in Santa Clara County as a whole. And if you talk to any real estate agent that's doing a significant amount of business at this point, they'll tell you that it feels different. But in a lot of ways, it doesn't, because the activity levels are pretty much the same. I mean, case in point, yesterday we were helping a buyer who is looking for a home here in San Jose, and first day on the market comes on, and he lets us know, hey, we want to take a look at it. Shelter-in-place orders allow for homes to be shown that are vacant. Home was vacant, so we went and showed the buyer. Buyer was very interested. Buyer decides he wants to make an offer. By the time we call the listing agent to make an offer, there's already another offer on the property. Mind you, the property's been on the market less than 6 hours. Okay, so buyers are still out there, and they're still paying over list price for properties. Think about that. Okay, this is not doomsday yet. This is not the apocalypse for Silicon Valley real estate. And there are many experts that are predicting a very small dip in real estate prices if any at all. And a lot of them are predicting appreciating home prices in 2020, despite the mass hysteria, despite the economic fallout, despite, coronavirus and all this stuff that's going on right now. Despite all of that, guys, despite all of that, we're still in a good position right now here in Silicon Valley real estate to weather the storm. Last piece of information here I wanted to share with all of you, CNBC article, which I'll link down below. Talks about mortgage applications and weekly mortgage applications. Here's the headline: weekly mortgage applications to buy a home make a strong recovery as rates hit a new record low. Obviously, mortgage applications are a strong indicator, and if you've watched these videos, we've talked about this before, but they're a strong indicator of buyer consumer confidence, right? And that is this consumer confidence is predict, it does predict, it can't predict, wow, I had a brain fart there, but this type of behavior kind of predicts what the overall consumer confidence looks like, right? What consumer confidence looks like in nationwide, right? So we look at, oh goodness, it froze. This isn't good. Oh, here we go. So mortgage demand from homebuyers. Here we go. Mortgage demand from homebuyers jumped 12%, signaling a potential turn in buyer confidence. Volume was still 20% lower than the same week 1 year ago. So applications are up week over week, pretty significant, given the fact that we're also seeing that pendings are also on the rise compared to last year, and the shift right now is happening. You can feel it if you go out on the street. If you talk to friends, if you talk to people that are also experiencing this with us in real time, humans are adaptable. We are adapting to the circumstances right now. We're adapting to all of this, and I love seeing how malleable we are and how resilient we are as a community, as a species. I mean, it's so refreshing to see, and this right here, this adaptability. That is the reason, the adaptability of the human species, that's the reason ultimately that we're seeing this surge in consumer confidence. People are saying, hey, look, life's changed and it's going to be different for a little bit, but life still has to go on. And we had these plans. We had this lined up for the next 12, 24 months. This was our life plan. Let's just, we got to do it. And rates are really, really good right now. Honey, why don't we just apply for the mortgage? Why don't we go out, see what's out there, and if we like something and we want to make an offer on it, at least we're ready. At least we're prepared. And that's the message I want to drive home today, guys, is the adaptability of the human species is driving consumer confidence, right? And consumer confidence is playing into a rise in pending sales, a more of the demand, or more of the supply rather, being absorbed by the marketplace. And to me, with all of the negativity that you're seeing on the news, to me, this is great news, right? It may not be the best news if you're a home buyer, especially if you're thinking that you're going to get a deal. But at the same time, if you're going to buy an asset, wouldn't you like to know that it's the kind of asset that, despite all the mass hysteria, despite the sheer lunacy of all this, despite all that, the home value, the asset that you're buying, the value of the asset that you're buying can weather that storm. Can't say that for most things, guys. You're seeing it in real time, right? Oil, stocks, gold, everything. Real estate. This is Danny Gould, everyone, with the Selling Silicon Valley Group. We'll catch all of you. Oh, by the way, if you've watched this if you watched the end of this, thank you for staying with me for 20 or so minutes and listening to my word vomit. But really, guys, if you have any questions about anything regarding the market, you can go ahead, text the number down below. If you have any questions about buying a home, selling a home, refinancing, anything in this marketplace, you can go ahead and text analysis to the number down below. That's analysis to the number down below. And anyways, guys, this is Danny Gould with the Selling Silicon Valley Group, and I will catch all of you beautiful, beautiful human beings in the next video.